1. Start with energy. Explain with authority. Highlight with emphasis. And with warmth. BigBear.ai Holdings Inc. is currently trading at exactly $5.73, down approximately $0.11 or 1.88% on this trading session, as of 1:21 p.m. Eastern Time on Thursday, November 20th. The intraday chart is carving out a classic bull flag consolidation pattern, having retraced from the morning highs of around $6.10. We are witnessing a distinct compression in volatility, with the price action currently pinning itself right above the critical volume-weighted average price support level. To the uninitiated eye, this red tape looks like weakness. It looks like the post-earnings momentum is fading and the sellers are regaining control. The immediate expectation from the retail gallery, seeing this near 2% drop, is that the AI hype cycle for this specific ticker has run its course. They see the recent spike to over $7 following the Q3 earnings beat, and now they see the drift lower, assuming that the smart money is exiting the building. That is the expectation, a sell the news event where the bag holders are left wondering what happened. The reality, however, is diametrically opposed to this surface-level interpretation. What we are actually seeing is a strategic reaccumulation phase by institutional capital that is positioning itself for a massive structural shift in the company's fundamental value proposition. The market is not selling off. It is taking a breath before digesting the sheer magnitude of the Ask Sage acquisition and the just-announced international expansion into Southeast Asia. You are not looking at a dying chart. You are looking at a coiled spring being compressed by market makers who are absorbing the supply from impatient retail hands before the next leg higher. Common belief suggests that BigBear.ai is just another consulting firm, masquerading as a tech company, dependent on lumpy government contracts and suffering from slow growth. Investors look at the year-over-year revenue decline in the recent Q3 report, down roughly 20%, and assume the business is shrinking. I want to challenge that perspective immediately. That revenue decline is intentional. It represents the shedding of low-margin, legacy body shop contracts where they were essentially trading hours for dollars. In its place, they are pivoting aggressively toward high-margin, scalable software revenue. This is not a company in decline. It is a company in metamorphosis. They're trading empty calories revenue for nutrient-dense recurring revenue, and the market is currently mispricing this transition as a failure rather than an upgrade. Let's break down the intraday volume because it tells a story of hesitation, not liquidation. Volume today is tracking lighter than the explosive sessions we saw earlier in the week. If this were a true institutional exit, a dump, we would see volume bars expanding as the price drops. Instead, we are seeing volume contract as the price dips. This drying up of supply indicates that there is no real conviction behind the selling. It is simply a lack of buyers at this exact millisecond, likely due to broader market jitters involving Nvidia stock and the general tech sector rotation. However, the bid support at $5.65 is incredibly thick. This suggests that large orders are sitting just below the current price, waiting to catch any shares that fall. This is passive accumulation, and it is the hallmark of a fund that wants to build the position without spiking the price. Now, let's get into the Ask Sage acquisition, because this is the catalyst that changes everything. The market has not fully priced in what this means. BigBear.ai isn't just buying a company, they're buying a moat. Ask Sage is one of the only generative AI platforms that is FedRAMP High ready. Do you understand what that means? In the world of government contracting, FedRAMP is the golden ticket. It means your software is certified secure enough to handle the government's most sensitive unclassified data. Most AI startups will take years and millions of dollars to get this certification. BigBear.ai just bought it. They can now deploy generative AI agents into secure environments. Think the Pentagon, the Department of Homeland Security, and classified intelligence networks immediately. This gives them a massive first-mover advantage in the sovereign AI race. While other companies are still filling out paperwork, BigBear.ai is deploying code. But the story gets bigger with the breaking news coming out of the Dubai Air Show today. We have confirmed reports of a strategic Memorandum of Understanding, MOU, signed between BigBear.ai, Pahang Aerospace City Development, and partners like Easy Lease and Vigilix. This is not just a press release, it is a geopolitical maneuver. They are effectively being tapped to build the AI brain for Southeast Asia's first AI-driven aerospace hub in Malaysia. This project includes a potential international spaceport. Think about the scale of that. We are talking about integrating AI into border security, transit systems, and critical infrastructure for an entire smart city ecosystem. This validates the thesis that BigBear.ai is not just a US-centric defense contractor anymore. They are becoming a global exporter of sovereign AI. The market is currently valuing this deal at zero because it is just an MOU. But if this converts to hard contracts, the revenue potential is in the hundreds of millions. Let's contextualize this with the broader sector. If you look at Palantir or C3.ai, you see companies trading at massive multiples of sales. BigBear.ai is trading at a fraction of those multiples, yet it is winning contracts in the exact same sandbox. The Vane Prototype Award from the Department of Defense is another critical piece of the puzzle. This system uses AI to predict geopolitical risks by analyzing foreign media. In a world where information warfare is just as important as kinetic warfare, this tool is indispensable. The fact that the DoD awarded this to BigBear.ai over larger, more established prime contractors speaks volumes about the efficacy of their tech. They are winning on merit, not just connections. I want to pause here and ask you a question, because this is a complex story. Comment below. Do you trust an AI system to effectively manage national border security and predict geopolitical conflicts? Or do you think the human element is still irreplaceable in these high-stakes decisions? I'm curious to hear your thoughts on the ethics and efficacy of AI in command. Drop a comment below. Moving back to the analysis, let's look at the financials. The Q3 earnings report was a double beat. They beat on earnings per share, coming in at a loss of 3 cents versus an expected loss of 7 to 5 cents. They beat on revenue, but the most important number was the cash position. They have a record cash balance, bolstered by recent financing, sitting at over $70 million in immediate cash and significantly more in total liquidity available. This removes the bankruptcy risk or immediate dilution risk that often plagues microcap tech stocks. They have the runway to execute the Ask Sage integration without coming back to the market with a tin cup. This financial stability is a massive green flag for institutional investors who are restricted from buying distressed assets. We also need to talk about the short interest. Recent data suggests that the short interest in BigBear.ai is hovering around 18 to 20% of the float. This is a dangerously high number for the bears. If the stock price pushes back above the $7 resistance level, these short sellers will be underwater. They will be forced to buy back shares to close their positions, which creates a feedback loop of buying pressure. This is the squeeze scenario. Today's drop to $5.73 is emboldening the shorts, making them feel safe. But this complacency is exactly what leads to a violent reversal. If a definitive contract dollar amount is announced for the Malaysia deal, or if the Vane prototype moves to full production, the rush for the exit from the shorts could send this stock vertical. Let's compare the user experience and market positioning. If you are an investor using Robinhood Stock Trading or SoFi Invest, you might see BigBear.ai as a volatile penny stock. But if you look deeper, you see a company that is building the operating system for national security. Unlike Fidelity Investments or Schwab Intelligent Portfolios, where you might buy a basket of safe defense stocks like Lockheed Martin, buying BigBear.ai is a bet on the software layer of defense. Lockheed builds the jets. BigBear builds the brains that tell the commanders where to send the jets. In the modern era, the value is migrating from hardware to software. That is why Tesla stock trades like a tech company, and Ford trades like a car company. BigBear.ai is trying to make that same transition in the defense sector. Technically, the stock is sitting in a fascinating zone. The 200-day moving average is acting as a floor. As long as we stay above the $5.40 level, the long-term trend remains constructive. The RSI on the daily chart has cooled off significantly from the overbought levels seen post-earnings. It is now sitting in the neutral 40 to 50 range. This is healthy. It means the froth has been blown off and the stock is ready to base. A break above $6